But Jaspreet, I've got my parents who need support. I've got family members who are struggling. I've got my friends that want to go out on the bars 3 times a week and concerts and activities. And I got to buy nice clothes for my job. And I've got to commute to work. And I've got to do all these things that cost a lot of money.
Yep.
Jaspreet, what do I do?
Where you put your focus, you're going to see the biggest results. If you want to lose weight, you got to put your exercise and your focus in the gym. You got to put your focus on your diet. If you want to advance in your career, you got to put more focus on your job and learning how to advance in your career. If you want to build more wealth, you got to put your focus on learning how to do that and changing the way you spend your money. And it's really just a matter of priorities. I used to guest teach in Detroit public schools. Obviously, our office is in Detroit, but I used to guest teach in Detroit public schools in some really rough school districts. And these kids were smart, hard workers, but many of them grew up in troubled homes. Most of the kids did not have 2 parents in a home. The vast majority of kids did not have 2 parents in a home. The vast majority of kids had no guidance or leadership. Some of the kids were already affiliated with gangs in high school because they didn't have anywhere else to go, and the gangs literally provided them food. So now when you're quote-unquote...
community.
Yeah. When your brothers are providing you food, they're trying to take care of you. You don't think of it as a bad thing. Now, here's the interesting part. If we focus on the financial side, I came in as a guest teacher just to talk about life. And I would talk about, just general motivation, and you can become successful, starting with the mindset side of things, but also getting a little bit into the financial side, because the kids there wanted nice things like every other high school kid in the world does.
You want cool sneakers and clothes and whatever, yeah.
And which is no different than any other high school kid. The difference is many of these kids here were also working jobs. They were working to earn money while going to school. And so, we talked to the kids about money, like, okay, you're working to earn money. Great. What are you doing with this money? I get paid. I go to the local liquor store. I cash in my check. The liquor store owner takes 1 to 10% of the check. I buy a bunch of things and I walk out, and then I have half of my paycheck left. Okay, well, what about these new Jordans that you got? Because that was a big thing in the school that I'm talking about, particularly where kids were really lining up to buy the J's, the Jordans. And I remember this so vividly because I remember kids would saying, I'm not going to eat because I want to save that $8
Wow.
so I can buy these shoes. It's a matter of priorities where, true story, some kids are prioritizing the Jordans over the food that I eat.
Wow.
And so life is really a matter of priorities now. If building wealth is really a priority, that means you're going to have to deprioritize some other things that you're spending money on. Now, this is where people get into those arguments of, does that mean I should stop buying Starbucks? Look, Starbucks is $5 a day, whatever it might be.
More than that now.
Whatever it is, right? Which, if you put that in a compound interest calculator, yeah, it could be worth $1 million. But now let's take a step back and look at some of the biggest purchases. The number one largest expense for most people besides taxes.
Car?
Your home. Where you live.
Yeah.
And then your car. And so now let's start with those 2 things. Can you live somewhere smaller and save a few $100 a month?
I say this, I've been telling people this a lot because I just told you beforehand that I bought my first home a year ago. At 40, I waited until I was 40 years old to buy a home. Now, I lived comfortable in a 2-bedroom apartment for 15 years almost, right? A 1-bedroom apartment, studio apartment, 1-bedroom apartment, 2-bedroom apartment, nice buildings eventually and paid for that. But I saved and invested money and waited till I was 40. Now I live in Los Angeles. It's a different price bracket. I wanted to wait till I had the home that I could live in for at least 10 years, that I was had everything I wanted. So it was a bigger investment, but I waited, and I let my money work for me for the last 13 years.
Yeah.
And there are sacrifices you make and pros and cons for whatever decisions you make.
Every decision.
Right?
I still rent today.
Yeah.
I own a portfolio of rental properties. I invest in stocks. I invest in startups. I run Briefs Media, my company. We have an office, an expensive office in downtown Detroit, but I also rent where I live.
Yes.
Are you going to feel bad for me because I rent?
No.
Well, I hope not. We demonize the wrong things. And I made a post on this on X or Twitter.
I think it's officially
Instagram,
X now. Yeah.
Where it was, let's stop normalizing buying BMWs in our 20s and start normalizing buying assets. Because it's very easy to demonize, oh, you're renting? You're paying somebody else's mortgage. You're you're making
Yeah.
somebody else rich. Why not build your own equity? Well, let's actually dissect the financial argument here because it has good merits, right? People coming at this from a good perspective that you have to own a home to build wealth. That's what people have made the American dream, to own a home. When in reality, the American dream is the ability to build wealth. People just assume building wealth means buying a home. Who did that? Well, none other
Banks.
than the bankers and the realtors. I used to be, well, I still am a licensed realtor. And one of the things they teach you when you become a realtor, especially if you're learning how to sell, is you talk to people about buying their biggest investment ever. And if you're buying your biggest investment, keyword investment ever, it's a little bit easier to get you to think about buying a little bit bigger and a little bit nicer, because now you're buying for your kids. You're buying to build a generational wealth. You're buying something that you can build equity in. But let's talk about this for a second. When you go and rent, the thing everybody says is you're going and paying a landlord's mortgage.
Yes.
When you go and buy something on Amazon, did anybody ever say you're paying Jeff Bezos' mortgage? Or whoever the other owners are, the
Paying
CEOs?
Starbucks mortgage.
You're
Yeah,
paying
yeah.
them because you are.
Yeah.
When you go and eat at a nice restaurant, did you ever think that you're paying the chef's mortgage? Because you are. When you go and get a drink from Starbucks, do you ever think that I'm paying for that barista's mortgage? Because you are. So you're getting a value. Now let's talk about, okay, well, I'm building equity in your home. Yeah, that's great. Nothing wrong with that. But banks are also smart, and they front load their mortgages. What does that mean? That means for the first, if you get a 30-year mortgage, for the first 14 and a half years out of your 30-year mortgage,
Paying interest.
the majority of your payment is going directly to interest, which means for the first year, almost all of your monthly payment is going in interest. So if I'm making $1,000 a month in my mortgage, year one, I have built essentially zero equity, because all that money I paid in year one, or almost all of it, is going directly to my banker's pockets. And it's not until year 15 that half of my mortgage payment is going to build equity. So yeah, you are building equity, but it takes a long time. And what ends up happening before year 15 is people go and refinance. And when you refinance, you're starting that process all over again. And so this is where, again, I'm not against home ownership. I think it's a great thing for the right person at the right time. Just make sure you can afford it.
Yes.
And at the end of the day, the way you build wealth is not by buying a home. The way you build wealth is not by becoming a doctor. The way you build wealth is not by becoming an NBA player. The way you build wealth is by using your money to buy investments. I called it the middleman a little bit earlier. The reason why I call it a middleman is because it's so difficult, and you really have to think of it as like a delayed process. When I make $10,000, it takes a lot of time and effort and energy to make that $10,000, right? Well, what do you want to do when you make this? You want to show it off. But instead, if I take the $10,000 and I put it in an investment, I don't see anything of it. A 10% return on $1,000 is $100. A 10% return on $10,000 is $1,000. And it might take a year to get the 10% return. It could take 2 years. Well, if you keep doing that, though, what you'll start to realize is that a 10% return on $100,000 is $10,000. And a 10% return on $1 million is $100,000. Right? It takes time to grow and build, but you got to get started. It starts with one, right? People say, oh, I can't see any real returns, real money until I invest $1 million. Well, the way you get to that $1 million is you start with one.
Yes.
Right? You're from Ohio, right? In the Midwest, it gets cold during the winter times. Okay. Detroit's a little better than Ohio, but what happens is when the wintertime comes and you want to build a snowman, you start with a small snowball. It's this big. Okay. You put it on the ground. And if you want to build a snowman, you start to roll it. In the beginning, you're not seeing any growth. That snowball stays small. But if you keep rolling, you stick with it, you keep rolling, it starts to get a little bigger. And then a little while by, it goes a little bigger. And then once it gets bigger, every time you turn the snowball, it gets a lot bigger, a lot quicker.
Yeah.
Because there's so much more surface area. And that's what you're doing when you're investing your money, is you are working to build. The beginning part sucks. There's no way around it. You got to start by spending less money. You got to start by investing your money. And you see no returns because the markets might be going up. They might be going down.
You might lose money.
You might be seeing, I mean, that's a part of the process. And you're like, what? I'm investing my money for 6 months and I haven't seen, where are my millions of dollars, right? But you got to stay consistent. The beginning part sucks and it's tough and it's not attractive, but you got to keep going. And that's why people get so attracted to, how can I get rich quicker, right? The next meme stock, the next hot crypto. I'm not saying all Bitcoin or blockchain is bad, but you get caught into this. How can I 10x my money in 10 months? How can I double my money in 10 months? How can I get this quick outcome? Which ends up becoming gambling, which is why most people who do that end up losing their money. I read a statistic the other day that said that 90% of people lose money in the stock market. Over the last century, the stock market has gone up by an average of 10% a year. Yet most people are losing money.
Why?
The reason why is, and if you're watching this video, you might relate to this. You go and find a nice stock. You put your money in. 3 weeks later, the stock is lower. And you feel like every time you buy a stock, the stock market goes down right after you buy. That happens to a lot of people. And then what ends up happening is a lot of people end up selling because they don't start to see that return in 3 weeks or 3 months or even 3 years. And so now you sell. But this is where now it's that financial education, which means the psychological education, but also which investment am I buying? Psychological investment means understanding there's ups and downs. I got to be able to ride through them and keep investing my money. The education of financial education is, what am I actually buying? Because I don't think 98% of America should be trying to pick the right stock.
No.
Invest your money in a fund, because you don't know if you're investing into the next Amazon or the next Bed Bath & Beyond. Mm-hmm. Because
but if you invest in a decent index fund or the S&P 500, you're going to, and you keep it in there, you're going to make money.
If you believe, well, as long as America keeps growing, you're going to keep making money. Because at the end of the day, what you're trying to do is you're essentially trying to invest in the American economy. And if you believe that the future of America is going to continue to be bright and it's going to continue to be better, then you want to own a piece of that today. If you believe that the future of America is a bunch of crap, well, then you probably don't want to be investing your money. And this is where one of the things I like to say in our market briefs, our newsletters, is don't get caught up in the emotion. And this
is so hard for people. So hard.
This was a big reason why I created market briefs, was because you're in the media space, I'm in the media space. In order to get somebody to click, that's the only way you're going to make money, right? You got to get someone to actually watch your stuff.
You need to create an emotion.
You create an emotion. Yes. And so now when we talk about the financial side of things, how do we create an emotion? Oh, the world is going to end. Right? The markets are going to collapse. Is this stock going to fail? This stock is the next NVIDIA. This stock is going to be the next Tesla. This stock is going to, you have to create this emotion. And what does that do? Especially for somebody who's, let's say, not super financially educated, somebody who's making, under a couple $100,000 a year, who has less than $500,000 invested. Then that's the vast majority of people. For the average person, that becomes, oh no, I bought into a bad thing, or I need to buy this before everything crashes. And so people then get excited, whether it's good or bad, and then you start manipulating your money, whether it's buying or selling, based off of what's happening in the news.
Yes.
And oh my God, it really...
how do people make informative decisions in an investment in a stock or the stock market without emotion? And then when they see their investment going down, obviously you only lose money when you sell it, but it feels like you're losing money when it goes down. How do you not get emotional and say, I need to get the money out that I still have in there, when all you're thinking is, how much time did it take to make that money? How much of my life did I spend to earn that money? Whether a job or a business or a side hustle or whatever it might be, I spent hours, weeks, months, years on that time for the trade of the money that I got to invest in this stock. And now I'm lost 20%, 50%, 70%. Have I lost my life?
Yep.
And I think that emotion creates a lot of anxiety and fear, regret, remorse, resentful, lack of trust, uncertainty. And I think I can't trust the stock market again. I can't trust myself in making a decision in what to invest in again. What do I do with my money?
That's funny you say this, because I just did a whole presentation on this in Briefs Media, which is when the 2020 pandemic happened, I owned stocks before 2020. My portfolio is going down like this. And when I was on YouTube, what I was talking about was I'm buying. I was buying here, I was buying here, I was buying here, I was buying here in phases on the way down, because I don't know how low it's going to go.
Yes.
And I was talking about this publicly on YouTube. And the comments that I would get when I was saying, I'm buying, I don't know how low it's going to go. I don't know what's going to happen, because if we remember 2020, it was a very scary time. We don't know if the economy is going to be open tomorrow. We don't know if we're all going to be dead tomorrow.
Right.
We especially in the early parts, we had no idea what this thing was. And markets were collapsing. It was the fastest stock market collapse since the Great Depression. And naturally, people got scared. And I was talking about this because there were so many news articles talking about how people were selling out of their 401ks. They were selling out of their retirement accounts at 60% losses, at 50% losses, at 40% losses, because they thought they were going to lose everything. And I was buying. But what ended up happening? We saw markets then turn around and go back up. Now, I couldn't have predicted that it was going to go up the way that it did. But this is where that psychology is so important. And the best way to understand the psychology is to look at history. Because while history doesn't repeat itself, it does rhyme. And what I mean by that is, if you look at any economic downturn, any market downturn, they create opportunities for those that are financially educated, for those that are prepared, and those that understand the financial trends. You have to understand those three things. So financially educated means you know how to find a good investment. Prepared means you have money to go out and invest. And understanding the trends means where are you going to deploy your money? What type of industry do you want to put your money in? What area do you want to put your money? So the financial education is now, well, am I going to put my money into this individual company? Am I going to put money into Amazon or the S&P 500 or something else? And, what's right for you may not be right for me. And you got to know your own financial education on how to analyze your investments. Is it stocks? Is it real estate? Is it something else? What type of stocks? What type of real estate? There's a whole financial education space there. Being prepared, because then what everyone's going to say is, well, the economy shut down. How am I supposed to have extra money? Well, you don't start getting prepared during the downturn. You got to start preparing before bad things happen, when times are good.
And winter is coming.
It's always coming.
Winter is coming soon for a lot of people, I feel like.
Well, yeah. And the thing you also have to understand is, because everyone says when, the first thing you have to understand is I guarantee a recession is going to come. I can bet you whatever amount of money you want.
You just don't know when.
I don't know when, right? We know.
It's happening. Every 10, 20 years, something's happening.
We have seen a recession every decade in our economy for the last century. In fact, the longest period the United States economy has gone in modern history without a recession was 2008 to 2020. And that was, quote unquote, a forced recession because the economy was shut down because of the pandemic. But that was the longest period ever in our modern history without a recession. So now understanding, guess what? Recessions happen. Market crashes happen. When are they going to happen? I don't know, but I want to be prepared for whenever the next one is. What does that mean to be prepared? That means don't spend all of your money. That means take some of that money and have it either invested or ready to be invested. And again, this all goes into your strategy, because for some people, they're going to set up a system where I'm just going to invest every week, every 2 weeks, every month, and it's just to set it and forget it. And that's fine. And that means when the next downturn happens, you just keep investing and you just keep riding the wave.
Yes.
For others, that means I'm going to invest every week, every month, but I'm also going to put money into a separate account. That way, when I see a good opportunity, there's market opportunities when you see a market downturn, but there's also investment-specific opportunities where a stock is going down or it's undervalued and you see a great opportunity to buy. And that could happen during an economic boom. I saw the same thing in real estate. I made a video about this, I think 2021 or 2022, where that was, one of the hottest housing markets ever. If you remember, that's when mortgage rates were low. Everybody was buying.
Yes.
Homes were being sold way over asking price. And I was still finding good rental properties.
Really?
It was difficult. It was more hard. It took more work. I had to be more picky, but they were still there. And that's where, it's that financial education. But then it's also then the third part, which is the trends. Where are you going to put your money? So in real estate, that means which neighborhood are you going to put your money in? Is it single family? Is it multifamily? Is it commercial? In the stock market, that means, well, do you want to be investing in artificial intelligence? Do you want to be investing in international companies? Do you want to be investing in healthcare? What is the general industry? Where is the trend going? And that's where now you got to understand, I got to know the financial education. I got to be prepared, and I got to know the trends. And these things don't start after the fact. People want to then start doing this when I see a great investment opportunity, but I have no money and I don't know what to do. Well, so a little too late to start worrying about that now. I mean, you got to start
Educate
preparing way
yourself
before
first. Yeah.
and prepare. And that's why it's all about, being financially healthy. It's just like being physically healthy. Actually, you have more benefits being financially healthy, because when you work to be physically healthy, I can put in 6 months of work. If I really dedicate myself for 6 months, I can build a shredded six-pack and look great and look really nice. But then if I go back to eating donuts and ho-hos, 6 months later, I'm going to be back to being fat, right? I mean, that is, you
Right.
don't build that kind of forever reserves, but you can with wealth.
If you
Because
invest for a big chunk and then you don't invest for a while, it's going to keep compounding that
yeah,
chunk.
I call that a decade of sacrifice. If you put in that decade of spending less and earning more, and you take this money, and instead of buying that Gucci, you go out and you buy these assets, right? Stocks, real
Buy
estate,
Gucci
whatever it might
stock
be.
instead.
Right. You buy investments. And now let's say these investments are paying you monthly or quarterly. Well, now you can spend that money on dumb things. You can spend that money at Gucci, buying the extra guac, buying whatever you want. And those assets are still there,
Yes.
right? You build up reserves. You can't do that with your body, but you can do that with your wealth. And that's what wealthy people want to do, is they want to build these reserves first. But that, it goes back to, well, what do I do? I'm making 30,000, I'm making 50,000, I'm making 500,000. It's the same thing. Start by number one, not spending all of your money.
Mm-hmm.
You invest the money you don't spend. You reinvest the cash flow, and then you work to earn more money. And the reason why you're working to earn more money now is so you have more money to invest. Because the reality is now, when you earn more money, you can invest more money. Because at the end of the day, a penny saved is just a penny, right? If I'm making 50 grand a year, maybe you put aside first $5,000 a year to invest. And then you realize, wow, this is great. I want to invest more. Now maybe you're investing $10,000 a year out of your 50 grand. Maybe you get to 15,000, but there's really only so many dollars you can squeeze out of this limited pie. But if you can go from 50,000 to 250,000, now there's a lot more dollars you can invest and a lot more spending power too.
Yes.
And then everybody says, well, how in the world am I going to go from 50 grand to $250,000? My boss is never going to give me that raise. Well, maybe you got to start thinking a little bit differently. Again, it's where are you going to put your focus and attention? That's where you're going to see the most results. If you want to increase your income, you got to learn, how do I increase my income? And the problem is most people are focused on increasing the income without having any financial education.
And they're spending it all.
You're spending it all. And they think, I want to go from $50,000 to $250,000 a year so
And
I can
still
have a nice
broke.
Bentley,
Right.
so I can go on the nice vacation, so I can have this nice stuff. But in reality, you got to know the financial education first. That way you know how to use the more money, and then you learn how to make more money.
Yeah.
And it's all accessible.
Yes.
Go to YouTube.
My ex-wife, my first wife, Dana, told me that she was pregnant. And I looked in this thing and I said, how am I going to take care of my child doing this? I'll never forget, I was in that room crying, sitting on a chair. I remember my ex-wife's brothers, they looked at me like I was crazy when I told them the plan. They laughed at me. But I always knew what I was going to do.